Welcome to Cash Talk, the podcast where we delve into the depths of finance, business, and life itself. I'm your host, John Cachia, a multi-award-winning wealth advisor with a passion for empowering ambitious Australians to confidently achieve financial freedom. Hey everyone, before we get started, this is a quick reminder that everything in this podcast is of a general nature and nothing has been tailored to your personal circumstances. So please seek personal financial advice before acting on this information. And welcome back to Cash Talk. And today I'm joined by Ayten. Ayten, how are you?
Good, John. How are you?
Yeah, not bad at all. Just nice and refreshed. It's been a good break to have with the kids and moving houses is now kind of settled down. And how about yourself? How are you feeling lately?
No moving house, but definitely some time with the kids has been good and nice and refreshed.
Yeah, it's interesting because obviously the kids being on school holidays, it is refreshing for them obviously to be around us, have some time kind of with them. But you know, for parents out there that have kids on school holidays, they know when we say refreshing, it's kind of good for them to be around, but it is very demanding. So, you know, we've still got some activities that we're kind of doing as well too to kind of keep them entertained. But today I wanted to get into a really kind of deep topic because it kind of is not just relevant to people's finances, but also relevant into a lot of different areas of people's lives, and something that I'm going through at the moment, which we were kind of sharing, which I'll share. But Ayten, we're here to talk about like people's like journey and the sacrifices they make and the mindset that kind of comes around with that. So I might pass it over to you to get things started.
Yeah. So one of the things that I've noticed when I'm working with couples is one of the pressing questions is let's stop everything else in terms of, you know, investing and wealth protection and all that kind of stuff to focus on one thing and paying down our debt. So in theory, that sounds great, right? So you get to 15 years, you're completely debt free. But at the end of the 10 or 15 years, what we've foregone is a lot of investing and compounding and protection. And that's really the thing that we need to kind of align with our clients. Yes, we have these goals that we want to achieve today, but also we need to make those sacrifices. So pushing out the debt repayments for another 5 or 10 years, in reality, is that going to make much of a difference in terms of when we get to that 10-year point where you're completely debt-free? Are you going to be any happier because you've sacrificed along the way?
Yeah, and the reality is that we're not talking about something that you need to do for 1 week or 2 weeks. You know, this is usually a 5, 10, 15-year journey. And so along the way, yes, sacrifice is very important, but so is the reward for the progress. Yeah. And the other factor that comes with that particular situation around debt is around investing. The loss of 15 years worth of time of investing, not only is there the compounding effect, but what that kind of goes into is also the risks that you need to take because you want time to be your best friend, not your worst enemy. So the shorter the time frame to achieve the result, the more risky you need to be. And think about this exactly like you jump in a car, you need to be somewhere in 5 minutes. Oh, geez, I've got to rush to where I've got to go. But if you can be there and allow 25 minutes, you can kind of just go there safely and reduce the risk to get there. And that's the same thing. So as much as it's great to pay off your debt, and we're advocates for doing so, you also need to be investing at the same time. And getting that balance right is so unique.
Yeah.
So unique because there's also other contributing factors. It's around, you know, what are we doing for the kids in regards to schooling? What's going on in my income trajectory? Am I having time off work? How many holidays do we go on? All of this stuff that kind of gets put into things. It's not as simple as I'm just going to go back to that. And I actually think that in that case with that particular client, they're actually probably going back to their minimum requirement as such. Is around in regards to I can't be bothered investing. I can't be bothered worrying with the volatility. I can't be worried with all of that stuff. I just want to know I pay off my house and I'll worry about the investing part once my debt is done.
Yeah. I agree with you. And I've worked with clients who are in their 20s and 30s, clients who are closer to retirement. And those clients that haven't had financial advice early on, they get to that stage where they pay off the debt. But as you said, they come to that stage and they realize that, well, yeah, actually I do need to take on additional risk because I have a shorter time frame now between now and retirement. So I really want to push that envelope as far as I can to be able to achieve those goals before I get to retirement. However, had they kind of started 20 or 10 or 15 years earlier, they wouldn't have needed to take that additional risk at that point.
And I think the other thing as well too is because investing is like watching the grass grow, whereas debt, it's like it's this kind of psychological reward, where you've got $800,000 worth of debt, that payment went in, you can see it go to $799,500, and you're actually seeing it. Don't get me wrong, there's a lot of people that kind of go, oh, I'll never pay off the debt, and they kind of put their head in the sand. But for most people, seeing their debt goes down actually gives you a bit of like a small percentage of like a dopamine hit. Yeah. So we're wired to do that. Where we have to think about things is around changing the way you think to get your dopamine hit from your finances in different ways. And this is where I talk about having a system of not just sacrifice but reward. Okay. And so one of the things that I actually even done with an employee in Thriving Wealth, to be honest with you, was they were making good progress with where they wanted to be. And it was around kind of just rewarding yourself with a set of shoes, for example. Small amount of effort, small amount of progress, small amount of reward. But now let's talk about big progress, big reward. So like being able to invest your first 50,000. Reward yourself. Small holiday somewhere. Do you get me what I mean? Or a holiday somewhere. Invest your first 500,000. Big holiday somewhere. What we tend to do is we actually do it well with the kids, which is like, hey, you've done this, you do all of this, you've been good, and therefore we're going to reward you. But we need to actually build that into our way of thinking, because it will allow us to actually have more consistency and longevity in regards to achieving all of these things as well. So, and also you need to be mindful, no progress, no reward. And this is the issue that I have with most people's finances before they come to see us. There's all reward and no progress. It's like if I have to be true to people, and for those who know me know I am, you shouldn't be rewarding yourself because you haven't done anything great. And it's a society kind of we live in, which is like, this participation. No, but if you're going to be super critical, you need to be super critical on yourself. You borrowed $800,000 to buy your house, but now looking at it 5 years later, your debt's at $1 million. How is it worth $1 million? And like, this is what we're seeing. And so I think we need to kind of look at our finances both on, yes, the financial goals and the way they're being achieved, but how do we adapt in our mindset? How do we adapt in our habits and our behaviors to do the trek that's in front of us? Because the trek in front of us is a long journey. And, I was talking offline around, I've been very, very focused in regards to my health and, very focused over the last few years, probably the last 7 years now, to be honest with you, around, my physical health, my mental health, and my spiritual health. I think that, there are key pillars of longevity in life. Sometimes I'm not good in some areas. You know what I mean? Sometimes I don't pray as often as I would like to. Sometimes I feel disconnected spiritually. Sometimes I don't go to the gym. Sometimes I have 3 weeks of, not sticking to my food plan. During those areas, I need to remind myself I shouldn't be rewarding the poor behavior. And some people are saying like, oh, John, you're too hard on yourself. Well, no, I want to be the best version I can of myself. And I understand that it's a journey. And over the last 7 years, it has been up and down. It has been up and down, trying to navigate the kids. And I've got all the excuses under the sun. As all of us do. But it's around, do I think at 37, I'm better than when I was at 30? 100%, Ayten. 100%. And now if we translate that journey, that snippet of that journey into our financial scenario, I see that all the time. I see people go up, down, left and right. But when we look about 7 years of kind of sticking to just being a better version of yourself each and every year, or a better version of your finances each and every year, the clients that have been with us for 7 years that have listened to what we say, they're in a much, much better scenario. And every single one of them are saying, I wish I started it 17 years ago. Now, main factor, what's changed, yes, their finances have improved. Yes, my blood sugars have improved. But the reality is the way you think, the way you approach life. Like for me, a big one that I didn't even used to notice was things like the sun rising. You know, for me, this morning, woke up, watched the sunrise, look at the beautiful orange that's in the sky, and like just taking a moment to just appreciate that. You know, like that's me obviously working on both my spiritual and all of that stuff. But you know, now I'm getting granular. Now I'm getting into how much deep sleep I get, how much REM or REM I get. Translate to our finances. Yes, that's what we're doing on our finances. Once you're in year 7, you're getting to like the nit and gritty. But at the start, it's just like, John, just get out of bed and go to the gym.
Yeah.
Do you know what I mean? So what I want to kind of, take out of that and how it links is around like, this is every part of your area of your life. So why isn't it reflective on people's thoughts when it comes to their finances? What do you think that is, Ayten? Because I think a lot of people are more aware that, I should go to the gym, I should get all of this. But why do you reckon that is about the finances?
I think it just comes down to every area. I mean, we all know we need to exercise more, eat well. We have that knowledge. It's taught in schools these days, but it's just a matter of actually doing it. And sometimes it feels really hard because 10 years, no one really thinks about how long it's going to take. One of the first questions you ask in a meeting with a client is, when do you think you'll be debt-free? Because when you go to the bank, they go, here's your 30-year loan. And you're like, okay, I have to pay this over in 30 years. That's a long time. Feels like it's unattainable. So when you kind of show them that we can do this in this amount of time, but we're also doing all this, it kind of gives them like a baseline to kind of work from. But before coming there, you have no idea. You don't know what you're aiming for. Your one sole focus is, I've got this $800,000 or $1 million debt and I need to pay this off. How am I going to do that? Okay, well, I'm definitely not investing to do that. I'm definitely not going to go on any holidays. I've had clients say to me, well, we just won't go on the holidays and we'll just pay off the debt faster. But like you were alluding to just now, the reality is if we strip ourselves from all these things that we want to that help us enjoy life, we're going to sit back and just be at home, very miserable. And the reality is we're actually not even going to get to that goal because it then becomes a chore.
And it becomes painful. It might seem easy. Like it might seem easy at the start because like your immediate cash flow is not going, but it becomes more painful.
Yeah.
And I honestly think that there's a few reasons why I think it is like this. I think we approach our finances very hidden. I think a lot of people talk about their health journey a little bit more than they'll talk about their finance journey. You don't sit around the kitchen table and say, I've started investing. Like most people don't. No. Yeah, most people don't do it. Most people will talk about, I went for a run down the river. It was a really good day. I took the kids, went on the bike. They'll talk more open about it. So I think we've got like this still taboo. Yeah, it's a bit of taboo around it. I think the other aspect is around there's also a lever of debt. Yeah, and so like I don't think we have that in health. Well, we kind of do in regards to things like steroids and stuff like that, but you can get very accelerated and take a lot more risk by taking on debt. So, for example, I don't want to do the effort, but I want a caravan for this summer. Go out, go get debt, go get the caravan. Bang, bang, done. Yeah? Yeah. And so you're really taking from your future to worry about today. In your health, it is also there is also that regarding, like, for example, you can take steroids, for example, or you can take peptides, but you're taking from your future health. Like, there's a reason why most doctors and stuff say don't to take that, because you take that for long periods of time, what the degenerative situation is for your health. Yes, you might look good right now, but what does that mean later on? So I think there's this matter of debt and the taboo that causes people to then with their psychology go, well, I can get to the goal much quicker through the debt, not do the effort, and I don't need to tell anyone about it. That's concerning because actually the people that have the wealth, the people who are actually wealthy, they will openly talk about it, especially with their family. They will openly talk about it with advisors. Yeah, they want to be better. They want the knowledge to be better, so the behaviors are better. So I think we do have that kind of lack of open communication that is fundamentally causing this to be an issue.
Yeah, I agree. You're right, because at the end of the day, you can get debt easily. I remember when I was in my 20s, I was first job, award wages, and I got a credit card and they gave me this limit, astronomical.
Frightened you?
for me, that was my first credit card. And I was like, wow, like, what am I going to do with this? It's a lot of money. But people then go spending because they don't understand the consequences. It's a bit like what you were describing there. You're taking on more debt, and that's like, well, I'll pay the debt off later. That's a later problem. Like just kick the can down the road kind of thing. So yeah, it is that the ease of getting what you want now without having to think about what that looks like in the future.
And I think the other aspect as well too, 18, is a lot of people think that they're better than they are. I don't know, it sounds full on, but like you need to, I think that I'm going to become a marathon runner the way that I'm going, you know what I mean? But the reality is I'm not.
Yeah.
You know what I mean? And so what I mean by that is a lot of people have the greatest motivations, but the real game changers are the ones who stick to it.
Yeah, correct.
Okay, so when you look about, and just so you're aware, if there is a client in Thriving Wealth that does not continue, okay, so let's say they get into year 2 and doesn't continue, and let's say Ayten's the advisor, we will have a chat about that client. We will have a chat around why didn't they continue, what could we have done better? What could have they done better? It's a way for obviously us to improve, but also to see, if there's real things that maybe we didn't pick up along the way. In most cases, the behavior or the habit has been subsided that they originally came to us, but it hasn't physically changed. That light bulb effect, use spiritual, because I always like losing weight. It's like going to the church every single day for 2 years, trying to do the process, but then just going, stuff it, I was never connected to Jesus, so I'm kind of leaving.
Yeah.
You get me what I mean? Like, that's fundamentally, motivation only gets you to a point, but there needs to be a transition from that motivation to that actual change, that game-changing process. And like Ayten's last one was a couple with a few young kids, and cash flow was a major problem. The wife came in and the partner didn't want to change the spending habits. The wife was in, they could see results when they made the changes, but didn't want to change. And so we also, when it comes to finances, we're not working with one person's mindset. We're also working with two people's mindsets. And so it wasn't in this scenario that they were actually going to live worse. They were actually going to live better. But the view of the individual was that they were going to live worse. And so, and when I say worse, it's they think that they're going to be restricted. And without actually opening up to going, I'm going to change. It's like when I first stopped eating pasta, for example, and I come from a European family, it was like, Ayten, oh my goodness, I'm never going to eat pasta. Oh my goodness. I remember I didn't eat pasta. This was many, many years ago. I remember I didn't eat pasta for about 3 years. But the first 3 weeks of doing it, I thought I was going to die. So there's this process of it went. And the reason why I went back on, my wife is affectionately known as the pasta queen. So you do things for love. But anyway, and my family make good pasta. But what I was saying is around that motivation getting you to one point. And there's this kind of mindset where you're like, oh my goodness, the sacrifice is so much. And they're not willing to change. And I know you were working very much closely with this couple. And it's something that it doesn't happen often, guys. It's just when they do happen, we analyze it.
Yeah, I mean, look, at the end of the day, you've come so far in life doing what you're doing, right? You've had 20, 30, 40 years of doing the same thing day in, day out. And someone coming in and saying to you, not so much you can't have that, but more like, okay, if we did it this way and we focus on these goals, this is how we're going to get to where we need to get to. It takes a long time to break through those barriers because you've got 30, 40 years of just doing what you're doing. So we can't expect people to change overnight, and I definitely don't expect that. But what I do expect is be open because you're coming to us because there is a problem. Something is not working. So we're trying to fix the problem, but we also want to work with you, have an open dialogue because if you're having concerns behind closed doors, well, I don't know because you're not telling me. I'm presenting you with a plan and saying, from everything that you've told me, this is how we can achieve your long-term goal. And this is what we need to focus on in the next 12 months to get to that long-term goal. But if you're not telling me there's a problem here, I'm not feeling comfortable, we can't work through that. And like you say, with the couples, there's friction. Okay, so no two couples. Well, I mean, there might be some, but I think about my own relationship. We're on different pages all of the time. You know, we don't agree on most things, but the important thing is the communication, because I say what I'm feeling, or I say what my opinion is. You tell me what your opinion is, and we try and come to the table with a, you know, a middle ground. We can't always be right all the time. We can't always have our way. And that's obviously relationships don't work like that.
And I think it's about obviously we talk about the give and take, but when it comes to couples, it's about alignment and your advisor being aligned as well. So you've got this kind of three-pronged attack to alignment. But if someone's not willing to come onto the ride, that does cause even further friction on that couple situation. So it's just a, you know, like I said, I often say, you know, people have the greatest motivations, to change, but how many do change? And that's why the percentage of successful people is statistically so small.
Yeah.
You know, as to be successful, you need to do what other people aren't willing to do. And most people aren't willing to stop their behavior and worry about it later on. And, you know, I can't remember who I was speaking to. I think it was JK I was having a chat to. And what really scares me is where people are going to be. Like, where's Australia going to be in 15, 20 years from now? And what I mean by that is I'm not talking about, like, for example, oh, we're overrun by a different country or we got polluted. Like, that's not what my focus is on. It's about actually people surviving. You know, in 20 years' time, you know, let's say you're 40, you're 60, you want to approach retirement. Like, we've got the cost of living, that's all good, blah, blah. But the biggest issue is that the people's expectation of their lifestyle standard.
Yeah.
So when we look at the baby boomers post-World War II, they typically, most of them are quite frugal, They didn't go on holidays every year because they didn't have access to this stuff, So they grew up in a different society. They didn't have all of these subscriptions, They didn't have, absolutely need this as a base standard. Gen Xers have obviously become much more lavish, okay? Gen Y or millennials have become even more lavish. So when we talk about Gen Xers and Gen Ys retiring, that level of lifestyle standard is something that Australia has never seen before. Never seen before. And it is my concern, I would say most people right now retiring can basic necessities retire on, say, between a 70 to 100 grand as a couple, like have a comfortable retirement.
Yeah.
You know, 20 years time, and I'm not saying, like, imagine in today's dollars, I can see that 150.
Yeah.
You know, 200. Do you know what I mean?
It's interesting that you say that, because there is a study that comes out every year with numbers in terms of what does basic retirement look like, moderate and comfortable. And that comfortable that you're talking about on this scale is the higher end, right? So when I see the numbers and I tell people the numbers, it's about $90,000 for a couple. But in that $90,000, you're going overseas once every 7 years.
Yeah.
Now, for you and I who like to travel, once every 7 years is like mind-blowing. Once every 7 years, you got to be kidding me. That's not what I want to do. I want to go like every second year, for example. But people don't understand what you actually need in retirement and what the 80,000 or the 90,000 gets you. So I think they have this idea that it'll all just work out. I'll just get the age pension.
She'll be right.
And then it'll be fine. Like, the government will give me my money because I've been working this whole time. What people don't understand is that's really just basic. You know, for a couple, it's probably, $30,000 or, 35, 4, something like that. And it's
in comparison to that.
Yeah. And on that level, you're barely getting a haircut every year. So people just don't understand what the levels of retirement are.
And this is one, you've got people that aren't even thinking about it. 2, she'll be right. 3 is the people that then become aware of the problem. And so we need to become problem aware to then make a change. And I'm not saying that you need to then sacrifice everything from your life today. Remember, we were talking about this just before.
Yeah.
But it's around what's to come. And we can't put our heads in the sand. we can't say, oh, she'll be right and put it. No. Statistically, the way we're going, the amount of money that you need to sustain your lifestyle right now, and if you want to kind of do it very easy, get your pace that you're both getting right now, yeah? And go to the after-tax incomes, okay? And just show what the after-tax income looks like. Now, hopefully you're debt-free, so then take your repayments off that and see what you're left with. That amount there is what's sustaining your lifestyle right now. That amount, yeah? And so if you look at that, like I said, you look at that, it is astronomical. And I think most people, when they get to then that problem aware stage, end up going, okay, well, I need to change. I need to change. And that's what concerns me, because the other aspect and the flip on a kind of separate topic is the difference between the ultra wealthy, the high net worth people, and average Australia. That gap between the two is getting astronomically bigger. Coupled them with the intergenerational wealth exchange, it scares me. It scares me because, Ayten, this is a country that wasn't like that. It's never been like that. Like our country has never been so separated. And then what you've also got is then, politically, which I'm not going to go down to, is then what are all the issues when you have a large demographic that are in lower social economic? You then have, a lot more criminal activity. You have a lot more political issues that are happening because people are feeling oppressed. Yeah. And then you've got this kind of super elite that then ends up happening. That's the flow-on effect. And that's why the government really ultimately should be concerned about what's going on here. But also people can't wait for the government. Yeah, they need to look at their own finances and say, well, how do I put myself in this scenario? Yes, it might sound hard now and it's tomorrow's problem. And that's even if it eventuates. Well, I'm going to say to you, the probability is it's more going to eventuate than not. And for you, more importantly, do you want to live in a life where you're asking for handouts from the age pension and living a basic need for the rest of your, average what's life expectancy 87, if you plan to retire at say 65, there's 20 something years of just handouts? Or do you want to be in a scenario where you can still enjoy what you're enjoying today? And that's where the change in motivation to then consistency, to getting the right advice and to sticking with it, rewarding yourself along the way, because life is about rewarding yourself as well too, and having a great life and enjoying it. That's where all of this really comes in.
Agree. And so just to circle back, I guess the sacrifice of paying off your debt early is foregoing everything else as well. So then you obviously need to take on the additional risk. Our job is really just to try and balance everything out. So we want to balance, all our holidays, all our car upgrades, education for the kids, all those goals that we want to achieve to help us enjoy life and make memories with our families. But at the same time, we also want to pay off the debt. We also want to invest for our future. And then we also want to have a comfortable retirement. So that's really what we're here for. And I think one of the most important things is communication, but also trust the process, because it's not going to happen with the first 4 weeks of working together. I've had some clients come to me at the first year and go, it was really hard at the start, but now we can see that it's working, and we appreciate it. We appreciate for sticking to the plan this time, because we know now that it worked.
And then when you get to year 5 and it's like, it's so easy, I can't believe everyone else doesn't do it. But that's the analogy from Buffett. Like Buffett says, my process and the way that I do things is so easy, but yet no one else wants to do it because they're kind of choosing the hard. They don't believe me that it's so easy. And it's not to say that there's hard bits. Yes, there is hard bits, but once you're in that habitual, when you get into the habitual process, it actually becomes easy because the reward feels so rewarding as well. The effort for the reward changes. It changes from this high effort, oh my God, I got to effort all of this and I'm only getting this. Over time, it becomes like less effort, more reward, more. And then it's like, oh, this is just easy. How good is this? How good? So anyway, Ayten, this was a great topic. Loved going deep into this one. Hopefully you did as well too. And if you're loving these podcasts, make sure you like and subscribe on all major channels and share them with your friends and family. Until next time, have a good one.